Good morning, everyone. It's a brand new week on the Vetiva breakfast meeting. This meeting is brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports, and we thank you for joining the meeting today. So very quickly today, we'll be running through, or our analysts, our equity and fixed income analysts will be running through the performances of the respective markets last week and what they think will happen in today's session. Also, we'll get Pan-African updates from our partner at Frontier Africa Reports, Boasin Omofai. After all the speakers are done, we should be able to take questions depending on the time constraints, as the meeting is supposed to last for only 30 minutes. However, if we're unable to get to your question, you can always send an email out to us at research@vetiva.com. Would like everyone to also note that the meeting is being recorded and is also being streamed live on our Vetiva Online Facebook page. So today we'll start with the equity markets analyzed by Seun Oshomo. Good morning, Seun.
Good morning, Chima, and good morning, everyone, and have a happy new week. We'll be reviewing the performance of the Ghana Stock Exchange today as the second market that we normally cover. The BRV did not trade on Friday. So the Ghana Stock Exchange closed the fourth consecutive session unchanged to maintain its year-to-date close at 14.06 positive. After a weekly gain of 89 basis points that was seen on Monday. MTN Ghana recorded the highest value traded, and this was followed by Cow Bank as well as GCB Bank. What we've noticed is the market has been flat for the last 4 trading days, and we believe MTN Ghana seems to be the major driver in that market in terms of volume. So I will believe that should continue going into the new week. So quickly moving to Nigeria, the market closed out the last trading session of the week in the red. Though this red close was marginal, as the ASI could not sustain the third day of consecutive gains. The local buzz was down 19 bips, but this couldn't prevent a week-on-week positive close after 6 consecutive negative weekly close that we have experienced in the market. 989 bips gain in Guinness, which was lifted to its intraday high during trading on Friday, and also positive close in ETI and GTB, amongst other, wasn't enough as profit taking in MTN, which closed 184 bips down, and Stanbic, which also closed to 170 bips down, as well as Oando, ensured that the market closed in the red. Activity level also continued to decline as the value traded dropped 26% from previous session. Zenith, UBA, and GTB were some of the highest traded counters by value, as we saw the banking sector accounting for over 60% of the value traded on the day. Sectoral performance was mixed for the day as 3 sectors closed in the green. That was the banking, consumer goods, as well as the industrial sector, all closed in the green, while insurance and oil and gas saw red close. However, the sectors ended the week higher, with industrial goods sector leading the pack with a 294 bips positive close. So all the sectors closed the week in the green. The 217 bips weekly close that we saw last week moderated the year-to-date loss of the market to 2.62% from the 4.79% from the previous week. So we continue to see a bit of a decline in the year-to-date performance, bit of a moderation in the decline, from the year-to-date performance, and we hope to continue. We believe we'll continue to see the market trade mixed and most likely sideways as well. Going into today and also into the new week, we expect investors to continue to watch out for the last set of 2020 full year numbers that are still outstanding. This should likely dictate market direction, especially some of the banks. I think we haven't seen results from Axis and FBN come out yet. We'll also be looking out for Boa Cement in the industrial space. So we believe this should shape market direction for the week. And speaking to results, FCMB released its full year 2020 numbers on Friday, with top line and bottom line both improving year on year. The PAT grew about 13%, and the company declared a 15 kobo dividend. So that was it from FCMB. And we'll also continue to watch out for how liquidity play out in the FX market, as foreign investors who are having challenge repatriating their dividend will likely continue to reinvest the dividend payout. So as dividend continue to come in, and if this challenge that we're experiencing in the FX market is sustained, then we will likely see some of these dividends being reinvested in the market. So we'll continue to look out for these two major happenings in the market for the week, and we believe these are the two things that will dictate market direction this week as well. That will be it for the equities market. Thank you.
Thank you very much, Sean. So like Sean highlighted on FCMB's results, would now hand over to Joshua to give us further details on their results. Please unmute Joshua. Okay, while we wait for Joshua's mic to be sorted, we'll just move on to Omorige to cover the fixed income market. Good morning, Omorige.
Good morning, Chima. Good morning, everybody. I'll start with the money market. Despite FAC credit of about 290 billion that came in on Thursday, we still saw a significant decline in system liquidity on Friday. Our system opening figures for Friday was about 95 billion positive, coming from the 175.51 billion positive recorded on Thursday. This significant reduction in system liquidity was on the back of the bond auction settlement of about 262.08 billion on Friday. As a result of the low system liquidity we saw on Friday, money market rates traded between 10% and 30%. So for today, we expect money market rate to trade at lower levels as system liquidity improves. Moving on to the FS market, supported by a slight gain of 0.09% in the external reserve, as it closed at $34.65 billion on Friday. The parallel market gained about 1 naira to trade at 485 naira to $1 on Friday, while the I&E window traded at the high of 414 naira to $1, closing at 410 naira to $1. For the CBN interbank market, we saw that close at 381 naira to $1. The I&E industry turnover decreased significantly on Friday to close at $72.43 million, coming from the $171.85 million recorded on Thursday. Our expectation is that the Naira will continue to trade at these levels. Moving on to the T-bills market. The T-bills market was very active on Friday. We continue to see sell-off in the NTB space, especially on the long-dated NTB papers. We saw a lot of offers on the NTB space on Friday as players try to offload their positions ahead of the NTB auction that is happening this week. However, a few trades were consummated because of the divergence of the bid and ask levels. In the OMO segment, some players look to offload their winnings, from Thursday auction, that's last week Thursday, at lower levels due to the paucity of OMO securities in the market. Currently, the long-held OMO is currently trading at around 7.5% in the secondary market. Our expectation for today is that the current sentiment will sustain in the TB's market as players continue to try to offload their NTB positions ahead of the NTB auction that is happening this week, while players in the OMO segment continue to try to take profits on their OMO winnings. I'll conclude with the bonds market. The bonds market traded on a very quiet note on Friday. However, we saw interest on the long-dated papers. Bids on the 2050 maturities were around 11.85%. We also saw bids on the 2045 paper moderate to below sub 12% levels. There were a few offers in the market, and they were majorly on the short-dated papers. We saw offers on the 2027, 2028, and the 2029. Overall, few trades were done across the curve as bid and ask spread remains wide. Our expectation today is that we see increased activity in the bond space today and tomorrow, actually, as players look to close out their positions for the month end. Also, we anticipate that we'll see some buy-side interest, largely spurred by coupon inflows, which will boost system liquidity. That'll be all for fixed income. Thank you very much.
Thank you very much, Margie. Just a quick question. With respect to participation in the OMO market, are we starting to see increased foreign investor participation like we had expected?
Hello, can you hear me? Yeah.
Yes.
The subscription level is still around what we have been seeing in recent time, but the amount of on offer significantly decreased because of the amount that is maturing. Like we have earlier said, the liquidity profile for April, May, June is much lower compared to what we have in January, February, and March. Like in the last auction, despite the subscription level, the amount that was offered was just about 40 billion, which was what was eventually sold. So the subscription level is still around the same level. It has not really changed significantly. What we have just seen. So, like I said earlier, we have seen increased subscription level, given that, like we already said, that because of the rate cuts by the Feds, so a lot of the FPIs will channel their funds to the Nigerian OMO space because of the increased returns that they are going to get. So we have seen increased subscription level, but the amount on offer has not really improved because of the liquidity profile that we have for this month and subsequent months. So the amount that we still that we sold in the last auction was about 40 billion. And we think in the next auction, it's still going to be around that level because of the amount that is maturing. Yeah, the subscription level has increased.
So we believe that this increased subscription level is coming from an increase in foreign participation.
Yes, basically for OMO, the only people that can participate in OMO are the banks and the FPIs. For banks, they are very skeptical about the amount that they can bid at the auction. If they bid very high, CBN will come and debit them CRR. They'll believe that they are not doing their primary function, that's giving out loans to the general populace. So they are very skeptical. So they try not to bid very high. So the increased subscription level should be driven by the increased participation of the FPIs in that space. So yes, it's driven by the increased participation of FPIs.
Thank you very much, Amarige. I see that Dapo has his hand raised. We'll just quickly take the input from Dapo or the question, and then we'll move to Joshua. Good morning, Dapo. Please go ahead.
Good morning, Chima. Good morning, everyone, and thank you very much. Like Amarige rightly noted, subscription levels, which is up, is largely driven by FPIs who had funds that wanted to repatriate but are unable to repatriate. They've been on the queue for so long, and then they've seen an increase, they can as well just try to rock the increase whilst they are still waiting to get FX. So yes, you rightly noted, banks and FPIs are largely the ones that go for home auctions. But this increase is not driven by fresh inflows into the country. That's why I wanted to clarify. These are not fresh inflows into the countries. These are funds that have been trapped here for some time and still looking for. This is just FPI is looking for ways to just optimize the cash they already have in the system, knowing fully well that they might not be able to get FX to exit as quickly as you might think. Thank you.
Thank you for the clarification, Dapo. So next we'll be hearing from Joshua Odebisi on FCMB's earnings.
All right, thank you, Chima, and good morning, everyone. So I'll just make a few quick comments on the results. We already heard that top and bottom line were up year on year. It was quite an impressive result. The bank saw interest income go up by 10% year on year, while interest expense went down by 2% to about 60.3 billion. Overall, non-interest income was also pretty up significantly, thanks to a 159% increase in FX revaluation gains, excuse me. So thanks to that primarily, and also some income from investment securities, they saw an 11% increase in non-interest income. Meanwhile, they saw a 62% increase in provisions year on year, which follows the same pattern we've seen across all the banks that have released so far. This led to a 9% year-on-year increase in profit before tax to about 21.9 billion. However, the tax bill for the year was down by about 18%. Now, we believe that this was down to a few deductions made due to some donations and charitable works that they had carried out during the year, which we saw again amongst a few of our other banks where they had a much lower tax bill, thanks to a lot of donations and things that they had done to offset or to reduce that tax bill. So overall, the PAT went up by about 13% year on year to 19.6 billion. We'll have a complete report out later today, but they did declare a dividend of about 15 kobo, which is 1 kobo higher than the previous year, and still they are trending significantly lower than the dividend payouts that they were giving out in 2013, 2014, which was around between 30 and 40%. But they're now currently at a dividend payout of about 15%, even though their earnings per share has recovered significantly to those 2013 levels. That will be all for FCMB. Thank you.
Thank you very much, Joshua. So a quick question. You mentioned that for FCMB, there was an increase in their provision levels, and you also mentioned that it was an industry trend. And you also mentioned how I think UBA had reduced their dividend payouts and FCMB now as well. So do you think that going into this year, would continue to see increases in provisions, or maybe at the end of the year would then see, or do you think would now see stabilized year for the banks?
Thank you for that question, Chima. So first of all, to clarify that FCMB did not reduce the dividend payout, they increased it by 1 kobo. But with regards to provisioning, basically the expectation within the industry is that after the restructuring that happened last year, where a lot of stage 3 loans were pushed into stage 2, and the repayment period was extended by about 90 days, in some special cases up to 6 months, we started to see heavy provisioning and returns to stage 3 by Q4. So the expectation in the industry is that this year we might still see pretty high provisions, at least in the first and second quarter, due to the fact that a lot of loan repayments and restructured loans are still coming into stage 3 as at Q1 and Q2. So provisions will still remain elevated, maybe not as high as we saw the peaks in 2020, but they will not return back to pre-COVID levels, at least not in the first half of the year. I hope that answers your question.
Yes, thank you, it does. I thought that you mentioned that their dividend payout ratio reduced from about 40% to 15%.
Oh yes, no, dividend payout ratio, but the dividend payout itself did improve. But the dividend payout of 40% was actually from 2015, where they were giving out dividends, rather 2014, where they were giving out dividends of about 25 kobo, with an EPS was at a historic high of about 1 naira 12 kobo. But now it has come down significantly. But overall, in years following that, it has gone up from 10 kobo to 14 kobo to 15 kobo. But dividend payout ratio has remained sticky at about 15% levels.
Yeah, thank you very much, Joshua. So finally, we'll be hearing from our media partners at Frontier Africa Report. So you'll be hearing from Boasin Omofai. Good morning, Boasin.
Yeah, good morning. Thank you very much. I hope you can hear me. Good morning, everyone. I think we'll just take up the conversation around the bank earnings straight from Nigeria, where Joshua just left it off about provisioning, straight to the Kenya, where some of the numbers are coming as ugly as far uglier than Nigerian banks in terms of restructuring. This morning, the largest banking group in Kenya, Equity Group, reported about 32% of loan books restructuring. The total loan restructuring fees, which were waived, was about 1.2 billion. That's about 1.2 billion foregone transaction fees. Things were looking pretty bad for the Kenyan banks as we speak. Profit after tax for equity groups down 41%. The whole of last week, we got pretty bad news across the region as well in terms of reporting banks. Standard Chartered of Kenya, Absa Bank reported about 113% decline in impairment. So as Joshua rightly said, this impairment, restructuring of loans booked for customers and all that will likely continue into in this year that we are already. Kenya authority, the central bank, has approved an extension up till about June. We haven't heard that officially from the Nigerian central bank if that will the same thing will take place. But one good news from Kenya was the 18-year amortized infrastructure bond, 60 billion, which was floated last week. That bond continues on the market till today. It comes just as South Africa was also floating about $67 billion infrastructure bond, while Nigeria is pursuing the Infraco PLC initial 3 trillion, headline figure about 13 to 15 trillion at full operation. Safaricom launched its 5G network in Nairobi last week on Friday. They have 150 cities still ahead on their target. But the bad news was that Nairobi has gone on a new lockdown because of the coronavirus, and about 4 counties around, which the authorities consider as the epicenter. We're expecting the South African authorities to also do a similar lockdown, announce the same before the end of this week, but that was very high as at last week on the books. Looking at the global space, the bad news from Mozambique, dozens of people were dead because insurgents carried out an attack over the weekend where the Total LNG $20 billion project work is going on. So the Total has evacuated most of its workers out of that region, bearing any other thing happening, interventions as it were. That project is likely going to go for a shutdown, at least for now. It's going to be a very busy week. Brent was trading lower, 63.59 this morning, because the Egyptian authorities said they will reopen the Suez Canal today, which is Monday, having done a whole lot of work on the blockage by the vessel that blocked it for most of last week. This week, we're looking at the Joint Technical Committee meeting of OPEC on Thursday. Then on the 6th, which will be towards the weekend, we'll have the Joint Ministerial Monetary Committee meeting. Then the full OPEC ministerial meeting will be on the 7th of April. So everyone keep that in mind as well. We're keeping that in mind. Over the weekend, the NNPC, our top authorities, provided a little bit of a background to the whole Port Harcourt refinery, the turnaround maintenance and all of that. All that will be in the news by today. I hope everyone keep an eye on that. But the government is going ahead with the $1.5 billion turnaround program, which has been announced. In neighboring Ivory Coast, President Alassane Ouattara has appointed a new prime minister. This is going to be the third prime minister in 1 year. That's quite of a problem, by the way. But according to the Ivorian president, which is the largest French-speaking West African economy, the UEMOA region is expected to see almost 6% growth in the current year. The rest of Southern Africa is all about earnings reporting across the platinum, mining, banking, and a few other listed companies. And to sum it up with Sudan in North Africa, very big news on Friday from US Treasury Department, helping Sudan to clear $1.5 billion debt with the World Bank. So there's an IMF executive board meeting currently going on, discussing the Sudan's highly indebted poor country. That was done over the weekend. A decision we're expecting to be announced anytime in the very near future. And that sums it up for us at this side of Frontier Africa Markets Report. Thank you very much, everyone. Have a great day and have a great week ahead. Thank you.
Thank you very much, Boasin. So now we can take questions. If you have any question, please raise your hand if you prefer to speak, or if you're joining us on Facebook, you can type in your questions in the comment section. Or if you're joining us on Zoom, you can also use the Q&A chat box or the chat box itself. Okay, I see that we have no question at this time for us today. We take this time to encourage everyone to continue to stay safe and practice the recommended safety guidelines. We hope that you have a great day and week ahead, and we will see you tomorrow at the same time.